It's Cappy, Cappy, he's a great guy. Cappy, Cappy, he's super fly. Continuing our touchy-feely happy consulting to see whether or not Google's algorithms are picking up naughty, naughty words that the fine young men and women are going to be Nazis over and make sure you don't utter, because then they might demonetize your videos. So actually we're testing the machine. Greetings, Cappy. I'm a 19-year-old personal banker who majors in accounting and minors in economics. I'll have my associate's degree in accounting early next year. I need to start planning for my career. I work for a bank that believes heavy on hiring within. I kiss a lot of rear. See what I did there, Google? I did not use a naughty word. But I don't suck any roosters. Oh, clever am I. So I plan on sticking with this company long term. On to my question. Can you make a YouTube video better explaining credit analyst and credit underwriting? I have a deep interest in both jobs, but info on them is really vague. My job offers a training program for both fields on top of tuition reimbursement. Awesome. I don't come from rich parents, attend fancy college, or have any connections. Am I better going with audit or private banking? I already checked the BLS, and credit analyst pays way more. Well, you be an analyst in either. Here's okay. Look, we'll take these one at a time. Let me finish your request. Quick success story: because of your videos, I make $3,000 a month. Drive a BMW. Get rid of it. Get rid of it. Do you fix it yourself? Because it's used. Guarantee you didn't buy that thing new. Get rid of it. Have saved up $15,000. I'm one of the world's youngest bankers. I'm far beyond any of my friends. I'm so close to being a political science, and I was so close to being a political science major. So thanks once again, touchy fluffy bunny feelings consulting saves another youth. All right, you're talking about two separate things: the role or position of a credit analyst, and that depends. Like, you could be a credit analyst at an individual company. You could be a credit analyst at an insurance company. You could be a credit analyst at a bank. And then you're talking about audit or private banking. Here's what I'd recommend you do. Let's talk about audit or private banking. They're both fine fields, don't get me wrong. I would really try to get into private banking. And I'm wondering if you're working for a larger company, because if they got a private banking division, they're pretty big. Private banking separates the men from the boys, right? Private banking, you have to have what it is you have to have a minimum net asset worth to be managed or be catered to by a private banker. So usually it's $1 million. Some banks require $5 million. It all depends on the bank. But what that does is it gets rid of a ton of BS and stupid people out of your life, your career, and your clientele. For example, when I was working at the bank in Wyoming, we had people that kept overdrawing on their account. And I was saying, well, let's close this down. They're costing us time. Like, oh, no. We can bill them late fees. See, we get late fees out of them. So every time these poor schmucks would be overdrawn, it would cost them $25. And we wanted to keep them as clients because that would get us an extra $25 in revenue. Now, these people even inevitably started forging checks. And then I had another guy come in and ask me for a loan for gas money. So he's lying. This is a drug addict. But his middle-aged, older man, almost 60, he's lying that his grandson was born in Denver and the kid has brain trouble and needs brain surgery, and they don't have money to drive from Casper, Wyoming to Denver, which is a 3-hour drive. It's not that far. And here's this middle-aged guy who should have his life together asking me, a commercial lender, we did, construction and buildings and businesses, he asking me for a gas loan. In private banking, you don't deal with those idiots. You don't deal with the bottom feeders. You're dealing with people that have their act together, their accountants get their taxes into you on time. You're just dealing with a better class and much more efficient and prompt people. They're much more professional. And so it's a lot less stress, a lot less babysitting, and a lot less headache working in private banking. Does that mean working in audit? You could, is a bad, no, audit's a fine field. Nothing wrong with audit. You can also parlay that into, you go from internal audit, you can go work for OCC, FDIC, one of the government regulatory agencies, or state regulatory agencies if your bank is a state bank or not. So they're fine, but man, if you could get into private banking, that's where I would go. Because life just gets a lot easier. It's not going to be, easy street, but it's a lot easier than babysitting the financial deadbeats of the world. Pulling teeth, when I get the payment, Because then you become a payday lender. I mean, that's what you want to avoid becoming, is one of these small community banks that effectively are payday lenders with way too much overhead. All right, so now you talk about credit analyst. All right, well, and I asked you, are you going to go into mortgage, you're going to go into private lending, or are you going to go into commercial? And what did you say? You said, were you going to go into commercial? No, personal banker, personal and small business accounts, basic teller duties. Bank left the mortgage market before the housing bubble. Awesome. Credit analysis is training 4-week program. Mainly teaches consumer and commercial lending. Okay, so they'd use you both for personal or consumer and commercial lending. I should note that these programs were recommended to me after making friends with a commercial banker in my branch. Okay, so they might be grooming you for a commercial banking credit analyst. So what is that? Well, credit analyst, you analyze people's credit, their credit worthiness. Are they going to pay you back? Now, depending on what type of loans you're talking about, if it's mortgage lending, a lot of times the mortgage, well, all of them will have their own lending criteria and how you would analyze income statements and tax returns and balance sheets. The feds also have it if you're looking at FHA. But there are certain requirements and qualifications that you need in order to qualify for certain mortgages. So when it comes to mortgage lending, it's pretty automated. You just you fill in the stuff. Oh, hang on. All right, mortgage lending is very codified. It's pretty structured. Here's your formula. Plug in the numbers. A number is spat out, and you get a thumbs up or a thumbs down. We got to talk about it a little bit more. So that's pretty automated. It's called automated underwriting. Look it up. You'll see what I'm talking about. In other words, there's very little human judging or interaction put into that. It's either they meet the qualifications or they don't. And the reason it's pretty automated on top of it is because usually your bank ain't going to hold on to that mortgage. They're trying to sell it on the secondary market. And as long as it matches that criteria, they're like, thank you. They take their commission and they shove it off the secondary market. And that's how the housing bubble started, among other things. Then there's a personal underwriting or consumer underwriting. That's more credit cards. You know, you're a teller. You kind of grab, oh, okay, do they have enough money? Lines of credit, personal lines of credit. And then it kind of overlaps into commercial lending, where the person is personally guaranteeing commercial lines of credit, commercial loans and stuff like that. But then there's just commercial underwriting, and I think, well, private banking, if they have businesses, they have companies, that you would probably play a role in that. But I'm going to guess this training is for commercial and personal underwriting, because the two kind of go hand in hand. If you're just looking for like a line of credit, they'll look at your credit score. As long as it's under a certain amount, okay, here you go, here's your line of credit. But when you get to commercial underwriting, commercial lending, it's not just the company that you're lending to, but the personal guarantor, the people who own the company, because they got to back up the company. So it's not just, oh, we're going to lend to this company. Hey, Mr. Owner of the company, let's see what your personal balance sheet and assets look like. So in case your company doesn't make the money and you file for bankruptcy, we can go after your personal assets or your personal income. So you got to learn how to analyze the credit worthiness of the company and the people that own it, or the guarantors as they are called. Now, when you go into this program, that's probably what they're going to teach you. So they're going to teach you how to calculate, not discounted cash flow, what was it? Debt service coverage ratio. They'll do global, they'll do traditional. There's a billion variations. But what's good about your company is they have training, which tells me they have a standardized way they want you to analyze commercial and personal loans, commercial risks. And that's good, because when I was a credit analyst, I'd go through and calculate the numbers. There you go. Well, I don't like how you did that. Well, what do you mean? That's how you calculate discounted cash? Well, we don't agree. Did you consider, I don't know, I'm trying to think of what they would say. Well, did you consider amortization? I'm like, yeah, EBITDA, I got it. You know, oh, well, I thought you didn't have it. I was like, no, I got it. Oh, well, I don't like this. In other words, there's a billion different ways to calculate it, debt service coverage, which is going to be the end-all, be-all of the ratios you're going to be calculating. And the fact that they have a training program means there's one way, it's indisputed, and that eliminates all the arguments between the bankers and the credit analysts. Now, you'll go get training, which you should. You should totally get training in this. That'd be awesome. Because then you're going to be, if they're like hiring within, you've gone through this program, you're trained the way they want you to underwrite and analyze these loans. You're likely to get into a credit analyst role, and then if you want to go make some more money, you could go into becoming a banker, not just personal banker, but a commercial banker, commercial lender. And they'll call it, well, if you're at a real company, they won't call you an assistant vice president. They would, every little piddly bank I worked for, all the commercial lenders, all the bankers are called vice presidents. We're all vice presidents. There were no bankers, no analysts. We're just all vice presidents. Oh. So, but what I would do is spend some time as a credit analyst, learn how to analyze and what's the word I'm looking? Vet loans. And then if you want, you got a little bit of a sales streak too, which I think you already do because you're a personal banker. See if you can't get into commercial lending, all under the guise of private banking. Or not guys, but under the division of private banking. Now, I'm going to warn you about something though. Doesn't sound like your company's this way. But outside of your company, there's going to be an issue. All right? I can almost guarantee you there will be an issue. Every great once in a while, banks get their act together and say, all right, we're going to have our analysts underwrite this or analyze this loan proposal that Bob the banker brought in. When the analyst comes back with the report, because we've told them to use this formula, it's pretty automated, we got this formula, this is how we underwrite them, all right, we're going to adhere to, we're going to give credence, we're going to lend credibility to this analyst. Now, you might have a lending committee where all the bankers and the credit analysts get together and you go over each loan. It's incredibly boring. And they say, well, I don't like this one, or I do like this one, and I'll take a vote, should we approve? And oh, if someone, he disagreed, he voted nay, why, duly noted, loan passes. That's if you have a lending committee. Otherwise, I'm thinking with this company, they're probably smart enough to have lending limits where a banker at this rank can lend, like he or she decides, no, we're making that loan. If it goes above that, they got to get approval from somebody else that's higher rank than them. If the money goes about that, $20 million, we got to, and then you may even have a lending committee on top of that for really, really, really big loans. Larger point is the fact that they have a program in place means they probably have it streamlined between the credit analysts and the bankers that want to bring in all these loans to be analyzed. That is not always the case. It's never been the case at every bank I've worked. There's never been a credit analyst training program. So what ends up happening, and these are shitty, crappy, small community banks that we're talking about here in the Twin Cities, where these bankers are losers. They got nothing. They've been either fired or demoted from. They just no bank. Well, so they come in and they just bring this horrible portfolio business. Just losers, losing money left and right. And so what will happen is you as a credit analyst, like, hey, analyze this loan. You're like, this is crap. They're never going to pay us back. And this is not. Don't approve this. And you go to the lending committee and you don't know this, but all the other bankers are idiots and morons. All of them are desperate for money. They're going to sell these loans on the secondary market if they can, so they're really just brokers. They're really just in it for the commission and the fees, because the bank itself is not going to hold on to these loans, especially mortgages. So the point that it'll drive you insane, because the credit analyst, you're merely a rubber stamp. You're a formality. And so even though you're like the voice of reason and reality, like, yeah, this sucks, I wouldn't do this. I mean, I even remember having one guy, I'm like, yeah, I wouldn't lend to this guy in the bank. Like, you just don't know what you're doing. He's getting in my face. Sure enough, the FBI shows up and says, we'd like those files on that loan you're working on there. And he's got this, oh, I wish I could curse. I know him. He went on to be a pastor because all scum hide behind religion. He's now, and I haven't seen him. He hasn't surfaced yet in a while. But this guy sheepishly goes, oh, the FBI called. I'm like, what? Huh? Yeah, you know that loan you're working on? I'm like, yeah, well, don't work on it anymore. Don't make any loans the FBI wants. I'm like, oh, Mr. fucking middle-aged man here. Oh, not going to be able to make the mortgage payment or your car payment for wifey poo this month. Hey, schlick. Anyway. I wasn't going to say that. Oh, so hopefully, from the sounds of this bank you're working for has its act together. Streamline, training, here's how we want you to underwrite. And the bankers might actually have their feet held to the fire on whether or not their loans go into default or delinquency. But don't expect that at other banks. The vast majority of other banks, it's all about wheeling and dealing, man. Wheeling and dealing. Remember, bankers are lazy egomaniacs who didn't want to work as hard as engineers but would like to make engineer money. And that's why they majored in business and maybe got their MBAs and became bankers, because they're willing to deal. Oh, big picture guy. So those are the guys that you're working for, typically in banking. So you are merely a rubber stamp. And if for whatever reason, you know, you want to play the game and you want to make the money, trust you me, if just approve it. Just write it in the glowing light. I mean, don't do it. I mean, play it how they want for now. If they want you to train, like, hey, you tell us if there's something wrong. Okay, I'll tell you if there's something wrong, because they may be a legitimate bank. But for every one of the banks that you're potentially working for, there's a score of banks that just want, that you're just in their way. Just make the bankers happy. Just whatever. Yes, absolutely. Oh, wonderful collateral. Oh, wonderful people. Yes, the woman is an entrepreneur with a horse farm, and there's lots of collateral and glue and horseshoes. Let's just approve this. Let's raise the limit by another 20%. Because one, you'll stay employed longer. Two, it'll be easier on you. And three, you'll just make more money. I mean, if I had just played ball, see, I thought I was going to stop the housing. I thought I was doing the shareholders a favor. Just play ball in banking. I think you kind of got it. I think you got it. You just play ball in banking. So absolutely take that training. Absolutely, man. Because if you can become a credit analyst without having to have an actual 4-year college degree, that's great. You're already in the system. Sounds like they're grooming you. Sounds like they really like you. You may have what's it. You know, and yeah, absolutely, man. Going and here's the thing: if you can work at a good bank, and I'm hopeful this is a good bank, you could work there forever, and you can make some really great loans, and you could really help grow some businesses, and be, you know, a true capitalist. What banks are there for. But if you find out it's the, well, they get I remember credit scores in the 400s, and we still would approve them. Well, they're having trouble in there. And if you hear this, well, Bill's a good guy. Actually, read my book, Behind the Housing Crash. Read through that. That'll tell you, like, the dark side. But if you ever hear, so-and-so is a good guy, and that's being used as an excuse to lend this idiot $2.5 million, yeah, you're not a credit analyst. You're a rubber stamp. Just be a rubber stamp. Yeah, okay, hey, woohoo. I know Bill has a credit score of 287. But he's a character, and I've known him since football days. So, all right, that's it. You guys got questions? Go to A-Hole Consulting. Your older brother will take care of you. And that's about it. We'll see you kids later. Toodles.